Welcome back to your weekly market outlook. This is for the 11th to the 15th of September 2023. Let's get this started with a quick recap of last week. Not much going on in terms of what's been up to in terms of the fundamental front last week. We do have the RBA keeping interest rates on hold at 4.1%, and then we have the Bank of Canada that's doing the same thing, maintaining a rate at 5%. There is a note with the Bank of Canada. I think there are talks about potentially easing off a little bit on the monetary policy tightening, so they might actually pause for a little bit longer for Canada. Australia, tone is a little bit neutral, dovish at this point in time. They did mention that there could be a need for another rate hike if inflation does continue to pick up, but for now I think we are going to be looking at the RBA keeping rates on hold at least for the next 2 months. And then we have the weekly unemployment claims from the US improved a little bit. So we have the previous number from 229,000, we got a consensus of 232,000 increase. We actually get a drop of 216,000, but that's pretty much it coming out from the last week. Although one thing to note, the ISM services PMI coming out from the US, that's also good. So overall, in terms of what's been coming out from the US, I think we are looking at numbers that are strong in terms of representing the economy in the US. They seem pretty resilient at this point in time, so I think that's a little bit of a good thing considering how bleak everything else is around the world. But yeah, focus for this week. Obviously, we'll get to the US CPI, but before that, we have the UK employment numbers. Now we have the UK employment numbers here. The unemployment rate is expected to pick up from 4.2% to 4.3%. That is the consensus at this point in time. And then we have the UK GDP, monthly GDP numbers. And then we have the US CPI numbers. Now, to take a note with the US CPI numbers here, we are expecting the CPI numbers to pick up, the headline inflation number to actually pick up from 3.2% to 3.6%. Consensus range at this point in time between 3.4 to 3.6%, but regardless, it is still going to be an increase from 3.2%. So I think the market right now is actually currently on pause until the CPI number gets released. It will be very interesting to take a look at the US CPI numbers. Remember that the previous month's number was a pickup from 3% to 3.2%, but it was below the consensus of 3.3%. That's why we have that range now between 3.4 to 3.6%. It'll be interesting to see if the inflation picks up above 3.6%, because that would actually send a potential hike this month, although people are actually pricing in more for a November hike at this point in time. But again, if we do have that surprise CPI numbers, then yeah, the sentiment could actually shift from November to a September hike from the FOMC. And then we have the Australian employment numbers. The unemployment rate is expected to remain stable at 3.7%. This is actually very important because RBA does take into account the employment rate, the unemployment rate in Australia to make their decision in terms of whether or not they should be hiking interest rates. But yeah, the Australian unemployment rate, that's going to be a key event as well if you're trading the Australian dollars. But everything else is pretty much hanging on to the CPI numbers. A lot of people are in the market right now is waiting for that CPI numbers to make a decision in terms of where the US dollar is likely going to go. And it'll actually be very interesting to take a look at the technicals today, this week, to just contrasts a lot on the expectation coming out from the CPI numbers. And then we have the ECB on Thursday, expected to stay on hold at 4.25%. The argument here is that there might be a potential surprise hike coming out from the ECB. But at this point in time, between the Dove and the Hawks, we're looking at about 50-50. This point in time, we're expecting rate to be on hold at 4.25%, but don't be surprised if the ECB does hike it to 4.5%, because the argument for the inflation to be sustained for a prolonged period of time, that's going to be the key discussion during the ECB's meeting this time around. And then we have the PPI numbers coming out from the US. That's going to be on Thursday, and then we have the US retail sales number, and then we have the weekly unemployment claims as well. Again, with the weekly unemployment claims, the expected gain is from 216,000 to 225,000, but previous week we saw that coming way below the consensus as well. Now, the Chinese industrial production is going to be key as well, because we are expecting the industrial production to pick up from 3.7% to 3.9%. Retail sales in China is also expected to pick up from 2.5% to 3%. Now, the reason why we're focusing on the Chinese number at this point in time, because if you're trading the Australian dollars as well as the New Zealand dollars, they do have a positive correlation towards the Chinese numbers, because we're expecting Chinese growth, and then Australia and New Zealand are one of their biggest trade partners in terms of the Western world, and also Australia does export some of the raw materials as well for production and manufacturing in China. So if you are trading those antipodean currencies, you probably want to focus a little bit on the Chinese development here. Other than that, we have the University of Michigan Consumer Sentiment on Friday, as well as the Empire State Manufacturing Index coming out from the US. But again, probably nothing major, considering we are going to be focusing a lot more on the CPI as well as the PPI numbers from the US this week. All right, moving on to the technicals. Now take a look at the dollar index here. We have reached 105 at this point in time. It looks like it's unable to break above 105. There is that surprise drop today as the market opens, and I'll mention this. I'll talk about this later on during the discussion on the Dow Japanese yen. But yeah, we can see the dollar weakens a little bit on Monday during open. Right now it is still trading above 104.50, so we're anticipating a little bit of a tight range between 104.50 and 105. That could be a potential short-term reversal on the US dollar itself, should it close below 104.50. So it is not clear as of yet, but we're looking at potential signs here developing. We have a hanging man pattern on the dollar index here, just right around 105, and we see that reversal here. So we could actually be looking for a potential evening star as well if the day closes as it is. Obviously today's at time of recording is still the Asian session, so a lot of things can happen. But if the market does closes below 105 and looking at like this closer to 104.50, we might actually be in for a little bit of a short-term reversal on the US dollar. The Aussie USD, just like all the other currency majors here, take a look at what's going on in the market. There's actually a gap that the market opens with today. But right now, price is currently pushing above pivot level. We're still looking at a little bit of a resistance coming in at 64.50. That could be a key level to watch out for if you're trading intraday. The overall tone for the Aussie USD remains to the downside, and we still have that gap to consider, this morning's gap to consider, and the market hasn't actually closed that gap yet. So the market could push up a little bit higher towards 64.50 and potentially fail and kind of attempt to close that gap, which is closer to around 63.75 at this point in time for the Aussie USD. The Euro USD is kind of in the reverse of what we see in the dollar index here, and the key level is obviously 1.07. Last week's attempt to break below 1.07, we actually saw the market closes back up just barely at above 1.07. And if we take a look at what's going on, there's a reverse hammer at this point in time, and then we see the market gaps up. Now right now we want to focus on 1.0730. This is going to be the daily the weekly pivot level for the Euro USD. If price is unable to break above 1.0730, we anticipate price to just trade between 1.07 to 1.0730. The potential here is that price could actually break above 1.0730, and we could actually see a little bit of a short-term reversal on the Euro USD as well, potentially leading up to the CPI. We might actually see price move up a little bit higher towards 1.0750, 1.08 to test a little bit of that resistance. But yeah, just be a little bit more cautious on the Euro USD. We were bearish last week on the Euro USD. This week, not so much. Right now, we're just looking at the key levels, and we saw the Euro USD really hanging on tight to that 1.07 level. So we might actually see a little bit of a buy on the dip situation that we actually picked up on Friday last week. We noticed that once price dropped below 1.07, immediately it picked up straight away. So we see a little bit of a struggle going on here between the bears and the bulls here in terms of the Euro USD. So be a little bit more cautious when trading the Euro USD. Ideally, we actually want to see the market move out of the current range between 1.07 to 1.0730. So yeah, if you're thinking of looking for potential trade on the Euro USD. Really depends, but if price is able to close above 1.0730, then we actually should anticipate a little bit of a pullback towards 1.08, 1.0850 on the Euro USD. The Pound USD, different scenario compared to what we talked about last week. We talked about last week's during last week's outlook. We mentioned the Euro USD was a little bit bearish, the Pound USD was a little bit on hold there, but we can see from the price movement last week, the Pound USD was actually the one that breaks a lot of the key levels. So we had 1.2550 broken, we had 1.25 also broken on the Pound USD. Right now we do have a little bit of support at 1.2450, which is about 127.2%. Now keep in mind, this level has not been touched yet. We saw the market gaps up today. So right now we anticipate market to test 1.2525 to 1.2550 at this point in time. Any rejections there, we still anticipate that push lower towards 1.2450 on the Pound USD. So unlike the Euro USD, where we might look at, oh yeah, you know, price is still holding on to 1.07, we actually don't have that kind of observation when it comes to Pound USD. We are looking at that, you know, short-term pullback here, but it's not really at key level there yet, because we don't see price touch 1.2450 and then bounce back up. So we're really looking at, you know, all of the major currencies picking up. We're opening up the market with a gap, and the Pound USD just followed through like that. But in terms of the key resistance, we're still looking at 1.25 and 1.2550 for the Pound USD. We don't anticipate any strong reversal as of yet in terms of the Pound USD. I think the market would actually still be waiting for tomorrow's employment numbers coming up from the UK. All right, let's talk about the Dow Japanese yen here. So the reason why the Dow Japanese yen and pretty much all the other markets gaps up or down depending on what you're looking at. I think we thought the Euro yen, Sterling yen, the Dow Japanese yen all gaps down. We saw the Japanese yen actually strengthen. This is actually because of an article published by a Japanese newspaper talking about what Ueda is, you know, what does the July tweak on the YCC actually means, and in his word, it's basically from Bank of Japan's point of view, it's more of a quiet exit. So this is the first time the word has been mentioned. So the Bank of Japan actually views that tweak as a quiet exit, so to the current monetary policy, so as not to shock the market. But yeah, the wording is there. It does shows a different view to what the Bank of Japan has been saying. You know, we want to maintain ultra easy monetary policy for, you know, prolonged period of time or in the near future. But the article over the weekend that was published over the weekend does mention the word quiet exit. So this is the first time that we actually know this word, and it gives a perception into the market that, you know, Bank of Japan, in terms of them conveying the message, I think it's a little bit confusing, right? Because they keep saying they want to keep ultra easy monetary policy, but with that article, they basically just say, look, we are basically looking to potentially tighten, but we just don't want to shock the market. So we tweaked it a little bit and not give out a clear message, but the market gets it. I think if we take a look at the Dow Japanese yen, in terms of whether or not this can still go a little bit higher, it could, right? Considering that there was that gap, it was nearly close, but it wasn't close. It wasn't actually close. So if today or this week the market picks up above 147, then we're still on track for that move towards 150. But do keep in mind the range right now between 145 and 150, as per the video note last week that was published on Friday. I didn't mention the range between 145 and 150. This is basically the intervention range from last year's intervention by the Ministry of Finance in Japan. So be a little bit more cautious when looking at the Japanese yen at this point in time. I think what happens today, this morning, was a little bit more of a reaction to the article publication, which happens on a Saturday. But overall, for this one here, technical levels still maintains 145 as a strong support level, although it's kind of key at this point in time for price to move back up above 147 to maintain that long position. But if it's not able to, the range between 145 and 147, it's expected to be more of a sideways market condition for the Dow Japanese yen, because I think market participants are looking at what's going on right now in terms of the article, in terms of the previous comments from the Bank of Japan. I think there's a little bit of a confusion which one is actually right, but yeah, it does disappoint me when it comes to central bank making out comments like that. Instead of being more of forward guidance, they just try to confuse the market, and I think that would be the current situation for the yen crosses this week. So be a little bit more cautious when it comes to yen crosses. But for Dow Japanese yen, as long as 145 holds, we're still maintaining that outlook for a potential move towards 145, and that's going to be strengthened if price is able to move above 147. Otherwise, 145, 147, if price is trading between this range, yeah, intraday traders might actually want to look at that as more of a consolidation range for the Dow Japanese yen. Again, that's 145 to 147. So that's pretty much it for this week. Good luck to your trades, and I'll see you soon.